You're watching Newsmakers, where we speak with executives from publicly traded companies that are making the news today. And with me right now is Don Ranta, the President and CEO of Rare Element Resources. Thanks for being here, Don.
It's my pleasure.
So, tell me, is one of the main reasons that you're trading at such a premium to your peers the fact that you're so advanced in the game here, or the grades, these really high grades you're getting, or what are the...
I think it's all of the above. Certainly the grades have a big effect on it. The fact that we've had two 43-101 resources, you know, the most recent update just this last May, and we'll have a new one coming out sometime next spring, is really favorable. And our results from our current drilling that we're announcing as we get the results back have been outstanding. Again, some very high grades, anywhere from 4 up to 17%. We had one interval that was 21% rare earth oxide. Amazingly nice grades. Plus our infrastructure, plus permitting. Just like you mentioned, Wyoming, a very mining-friendly state. Right. We anticipate that permitting, you know, it'll take its time, but it should go through very smoothly, and we'll do everything right, and we'll make sure that it goes smoothly.
Other things have really pushed you up as well. I mean, you're trading over $10 a share.
Yes.
This is no laughing matter. China, obviously, is the controller of the rare earth market in the world. They had a saber-rattling event recently with Japan, for example, and that, I think, helped to wake not just the United States up, but the rest of the world as to the importance of rare earths. Yes. And that something has to be done.
That's exactly right. And I think another thing that had an effect on our particular share price as compared to some of our peer group is that we did list on the Amex exchange with the New York Stock Exchange, and we have a huge amount of additional liquidity through that exchange. It's trading somewhere between 5 and 10 times the volume of what we trade on the TSX.
The demand for rare earths is very high right now and growing rapidly.
Yes.
It's kind of first horse out of the gate happening right now, and you're definitely out of the gate. But when do you expect to be in production?
We expect that we'll be in production, you know, with a fast track, and it's an aggressive schedule, by 2015. We think that's doable. And it really depends on the permitting. The permitting is the key, the critical path to our production. We know that Molycorp and Linus Corporation are saying that they're going to be in production in 2012, and they'll help supply some of the market, but they will not fulfill the entire need of the market. And with the growth rate the way it is, there'll be a need for a Bear Lodge deposit in production by 2015, and probably 1 or 2 other deposits too. Mm-hmm.
How important is the fact that you know, the neodymium, praseodymium, for example? Those are the two of the metals that you have in
yes.
High supply.
Right.
How important is that to your project and your value?
It's about 33% of the total value of the project, and then we have about another 30%, or almost 30%, that is with the heavies, with the europium, terbium, and dysprosium. And terbium and dysprosium are also in the magnets. So about 44% of the material that we'd produce would go directly into magnets, theoretically. Mm-hmm. And then europium goes into the phosphors for like compact fluorescent lights and so on. So that's where I get up to over 60% of our total value is going to be in some of the highest demand rare earth markets. And that's one of the key things for Bear Lodge. And I think people are recognizing that. I think that's one reason why our share price is held up so well and is really where it is. It's
a perfect storm for you in a way, in many ways. As we sort of go down the list of positive attributes of rare element resources, that you seem to have something in every category.
Well, we do, and this is a project that rarely comes along. I've only been on one other one where almost all the surprises that we've had over the last few years have all been favorable surprises. Mm-hmm. And basically, this project is the best project I've ever worked on in 40 years in the mining industry.
Where is Bear Lodge exactly, and who else is operating in your neck of the woods?
We're up in northeastern Wyoming, and very close to Interstate Highway, Interstate 90, and a lot of other really favorable infrastructure there. There are two other metal companies, gold companies, that are operating in the general vicinity. The Golden Predator has a property a little bit to the east of us, and Evolving Gold has another gold property that's a little further, but to the west of us. And a huge amount of coal mining. The world's largest coal mining region is the Powder River Basin, and that's just 60 miles to the west of us. So that's one of the big reasons we have such low power costs. Our power costs are going to be 3 cents a kilowatt hour, which are, I don't know that there's lower power costs anywhere in North America, or perhaps the world.
That keeps your costs down.
Yes.
And as well, the infrastructure that exists nearby would keep your costs down as well, which is not just roads, but go ahead and explain some of that.
Yeah, it's roads, it's towns. We have a power line that comes within about a mile of our project. And that power line would probably have to be upgraded, but I think that's one of the reasons our capital costs and our capital estimates are relatively low for our PEA.
Okay, let's talk about that preliminary economic assessment.
Okay.
You've got two cases, the base case, case 1, and case 2. And essentially they're very similar in many respects, except you're talking about different prices. So tell us about that.
Yeah, what we used again was basically a 3-year trailing average for the prices, and we were planning to produce concentrate. And so therefore we use concentrate prices. We didn't try and use individual rare earth oxide prices for our economics. And the number we came up with that we used in the scoping study was $5.51 per kilogram for rare earth concentrate. And then our second case, our case 2, was basically just a 25% increase, assuming that price goes up 25%. Now, we see a huge difference in the IRR, the internal rate of return. It goes from 40% at 551 to
60, isn't it?
To 60%, yes, at $6.89 per kilogram. That was the 25% increase. So we saw that. But if we double the 550 up to, let's say $11 a kilogram, then the net present value goes up from 213 at 550 to something well over $800 million for a net present value at a 10% discount rate. So the project is robust.
And those prices are more realistic with what's happening. What is that really at today?
Yeah, well, the current price is $38 a kilogram. So even 11, if we double it, that's a 100% increase what we use in our scoping study. And I'm not sure what the rate of return is. It's going to be, probably over 100% at that rate. If we double it and up to $11 a kilogram, that's still less than 1/3 of what the current price is.
Yeah, it sounds like it.
Yeah.
And just to recap that too, because you're just using 1/3 of your resource, is what it sounds like.
That's correct.
In your scoping study for potential, for the mine that you're looking at, the possible mine. Now, if you expand that, do some more infill drilling, suddenly you could triple that amount.
Yes.
Do some further drilling to the limits of the property because you're open in multiple directions.
That's correct.
So what would happen there? Would you say, oh, well, suddenly we've got a 100-year mine life, isn't that great, 1,000 tons a day, or would you increase the mine size?
We certainly, it very, very, very logical to increase the production rate.
Yeah.
Maybe from 1,000 tons per day to 1,500 or 2,000. But we want to do that in the context of the market too. Right now, we have strong indication from one of our principal consultants, a gentleman named Dudley Kingsnorth of a company called IMCOA in Australia. And he indicates that at 10,000 tons per year, there's going to be plenty of room in the market to handle that level of production. And 2015 is a good time to have that in production. You
want to be in production by 2015. Take us through the steps that'll take you to get you there, including permitting.
One of the key steps is that we collected a bulk sample this fall. We have almost 9 tons of material that will go into a pilot plant test, and from that pilot test, we'll be creating the concentrate that we'll use as a saleable product. So we'll bring that and use it for marketing that concentrate. So that's going to be one of the things. We're going to do a resource estimate on the rare earths this spring, probably first quarter. We're going to be working on a preliminary feasibility study next year. We'll have another drilling program that'll probably duplicate the program we had this year, because we still don't know where the limits of the system are, and it's important for us to know the full size of the system. So we'll be doing that. The other key thing is there's, for every ton of high grade that we mine, we're going to be mining at least 12 or more tons. It could be up to 20 tons of low grade material. We're going to look at that low grade and see if there's some way we can process that and get some value from it. Right. So that would be good. So
it's more upside, essentially. Yeah.
So preliminary feasibility study by the end of 2011, then fold directly into a feasibility study for 2012. At the same time, mine permitting would be advancing. If all goes well, maybe by 2013, 2014, we'll get our permits to mine. We'll do mine financing and start construction sometime in 2014, production 2015. That
sounds so simple. Yeah. Well, tell me that. I'm curious. There's two aspects of the financing. One is getting there.
Yes.
Up to your feasibility stage,
right.
Let's say, and I mean, what ballpark price tag on that, and how are you going to do that without much dilution?
Well, first of all, at $10 a share, we're not going to have a huge amount of dilution. We think we need about $50 million. We have about 10, a little over 10, well, 11 actually in the bank right now. Plus warrants and options that are coming, being exercised, so we'll get additional money there. But we've just announced a financing just a few days ago for a $50 million raise, and we'll be working on that over the next several weeks.
Right. So that'll get you there.
And that'll get us to the point where we feel we won't need any additional financing until we're ready to finance mine development.
How long will it take you to pay back your capital at Bear Lodge?
Well, assuming that we go with the $87 million expenditure, we've kind of indicated, and based on the prices that we use, the historic 5.551 per kilogram prices, it would take about a little over 3 years, around 3 years. But if we use the current price, it would be a few months.
A few days, yeah.
It'd be a few months.
Yeah.
But right now, and that's also based on, we were conservative in how we scaled up the project. We said, okay, this is an untested mill. It's a new process for this material. So we need to scale this up slowly. So we talked about 500 tons per day for the first year and maybe 750 tons per day for the second year, and scaling up to full production the third year. So again, we were trying to be conservative on that, and that's reflected in our economics. That's why it's 3 years, because if we were able to get it to full production in year one, it'd probably less than 2 years or somewhere around there.
Right. So you've got a lot of news to come out, really, too.
Oh, yes.
You're at this place where everything is great. Everything's, and there are some unanswered questions, and it sounds like regardless of what the answer is, everything is good.
Yes.
It just could be a lot better.
Yes.
So investors are going to have to hang on and keep checking back.
Oh, absolutely. And of course, the investors can look at what we use as our historic prices and the current prices, and all of a sudden you see the upside potential.
That's right. And also, investors can go to www.resourceintelligence.net/RIQ and look up rare element resources. You can check out all of the tonnages, the grades, the recovery rates, and even put some valuation on that project. Don, thanks so much for coming in again.
Okay, it's my pleasure.
Talk to you. Thanks.
Great. Thanks, Doug.